The agenda today is media financial review. The month of June marks the end of the first half of the year. It gives us a chance to take stock of our personal financial affairs. What did we set to achieve this year? Where are we on each of these items? Do we need to slow down? Where do we need to accelerate? And where do we just need to keep pace? And there are broadly 6 areas where we want to check that health. It is our incomes, our expenses, our contingency or emergency fund, our investments, our taxes, our insurances, our debts. Once we have taken stock on those areas, then I think as we go into the second half of the year, we will be moving stronger. Let's start with income. It's called the top line in finances. And the question is, have you in any way increased or reduced your active income? The money that you're making yourself, your salary, commission, professional fee, your business profit, your agricultural proceeds, that which you make yourself, active income, has it increased? Have you done anything to ensure it increases during the second half of the year? Evidently, the cost of living is going up. The second portion of that question is, have you increased your passive income? The money that's being made by your money. And how will you ensure it increases during the second half of the year? Do you desire that you have an increase? And what are you going to do to have that increase? So you're looking at active income. Has it increased? Has it reduced? Your salary, your commission. And this is when the idea of a side hustle, the idea of another income stream becomes a reality. What is it I can do to increase my income? But let's also look at our expenses, the money that we're spending. Are you keeping to your budget? Do you actually have a budget? Do you keep account of your daily expenses? Do you have a tool that helps you to capture your daily expenses? Are you keeping track? Do you know where your money is going with certainty? At the end of the month, have you found yourself doing a detailed analysis of the various categories of expenses? Do you know how much is going to entertainment? How much you're giving? What you're paying as fees? How much are you spending on food? What about transport? What about clothing? Do you have a good idea about that? Have you heard about smart living concept? Yes, the concept that ensures that you raise your standard of living without increasing your expenses. Have you heard about that? Do you have the necessary tools to manage your expenses? How to actually legally reduce your taxes? How to do comparison shopping? How to deal with social pressure? I know we have said here before, we need an emergency fund, we need a contingency fund, we need an opportunity fund, we need all that because life has a tendency of throwing curveballs to us. And so we might have a discontinuity in income. We also know that financial emergencies are a reality. They happen all the time and they don't have to be complicated. Your phone can get broken, but you need to replace it quickly. Your car can break down, but you need to bring it back to speed. What is your safety net in the event of financial disruption? Do you know how much you need for your fund? How much do you have? How accessible is it to you? Contingency planning is important because without contingency planning, moving ahead is not a reality. We will always get something that is going to pull us back. Let's think about another area where we need to take stock. And this is the area of investments. Have you sent your money out? Are your investments growing or are they declining? Have you checked out what's your total portfolio worth in terms of investment? Is it growing? Is it decreasing? By the way, is it diversified or is it in only one area? Have you taken advantage of low risk stable returns investments? Have you found your way into government bonds, money market funds? What are you doing at the circle? Is it working for you? Do you actually have money somewhere idling, money somewhere asleep? Have you dared to take any high risk, high return investments? Have you gone into forex trading? Have you ever heard about Mansaheks? Do you buy shares? Have you heard about REITs? And have you indulged in REITs? The investments you have, are they related to your financial goals? If you purpose to educate your children, what is the investment you have that is going to address that need? If you're focusing on financing your retirement, are you looking at pension scheme? Do you one day hope to buy an annuity? Do you have a real estate investment? Are you looking at government bonds? How are your investments related to your goals? Because that is important. In that investment area is key because as you work, as you busy do the things that you do, your money also needs to be doing something for you. Have you found out what investments are working, which ones are not working? In the chama that you are, is it real an investment or just a savings vehicle? When the year is over, have you made money or have you lost money in that merry-go-round? Are you in an investment club? And what is happening at the investment club? Are you people disagreeing and all the money is seated at the bank? Have you found reason to join the circle? Have you realized that the circle is not just for saving, but it's a nice place for you to be able to get debt at a very reasonable rate? Are you utilizing it as your loan generating machine? And have you found reason to take care of the dividend returns? Are you a member of a registered pension scheme? Do you know the advantages of being a member and how your money is going to grow quickly on that? Have you considered insurance as one of your investments? Yes, I know insurance is for protection, but have you considered it? Let's look at taxes. Have you filed your tax returns actually? Are you filing it yourself or are you looking for a professional? Because if you have involved a tax expert, they will have told you about taking advantage of government programs that reduce your personal taxes. Will you ensure to reduce your tax burden during the second half of the year? We want to look at insurances. Do you have personal accident insurance in place? What about your car? How have you insured your car? What insurance scheme are you on? Are you on third party? Are you on comprehensive? Do you understand? What benefits have you gotten? Do you actually have home insurance? Domestic package. Have you found the need for it? Have you gotten somebody to explain to you what it is all about? Do you have life insurance? Is it adequate? Do you appreciate how much you need? Do you have employer's insurance or do you have personal insurance or do you have both? Is it adequate? What about personal accident insurance? Do you have medical insurance? Are you on NSSF? Do you have somebody else you need to put on NSSF? Do you need to be guided here? Do you actually have a professional who guides you? Who is your insurance person who guides you on these things? How are things at a personal level? We have just talked about documents management. Have you done something? Do you think you can do better in the second part of the year? And one of the other areas is around debts. If you look at your debts, are they increasing or are they reducing? If you compare the debt portfolio you're holding now versus the one you had at the start of the year, is it increasing or is it decreasing? And I'm not saying it is wrong for it not to increase. You might have just taken a facility, you might have just taken a loan because you have a project, but you need to compare. But are you borrowing your own money or are you borrowing other people's money? Because it is almost an offense to be borrowing your own money. The bad debt are those money we borrow that we can't afford to pay. So it strains us. It strains our relationships. It strains our income. It is that money we borrow where the interest rate is so high, it doesn't make sense. There is nowhere we can put money and get that interest out again. It is that money we borrow. Wherever we put it, in fact, by the time we pay it, we can't see what we are paying for. It's already consumed. Consumer debt. We've gone to a party, we have partied, we have paid the bill. Surely we can't even see what we've been taking. Consumer debt. Money we borrowed to show off. Money we borrowed because we hadn't done proper planning. That's what to avoid. But good debts you need. The money that improves your financial future. The money that allows you to secure tomorrow today. Money you buy the appreciating assets. The money that you use for improving yourself so that you can be better tomorrow. We are looking at that money that helps you to buy your first car so that you can move faster. So how are you good debt? How are you bad debt? Is your debt portfolio giving you a lot of pressure? Are you waking up at night worried about the debt? Is it giving you headaches? Are you getting frightened when you see some people or when some phone calls are coming? Are you suffering from panic attack? Are you finding it increasingly difficult to deal with people? And is it giving you a lot of stress? We know there's value for good debt. So have you built your capacity for good debt? Can you borrow? If you're a member of the circle, are you just putting in the minimum? Or are you putting reasonable? Because the more you save, the more you borrow. Do you have a system for guaranteeing you? Are you taking little because you don't have guarantors? Have you built social capital? If you required 50,000 shillings last night, do you have 5 people you would have called quickly, long before you thought about the digital lender? That's social capital for you. So build your capacity. Have a good relationship with your bank. If you're in business, put money in the account, take money out, let them see healthy cash flow. Are you doing all that? Because you will need debt, whichever way you think about it. But you don't need debt that's going to have serious consequences around you. So take stock. Take stock on your debt. Take stock on your insurances. Take stock on your taxes. Yes, take stock on your investments. It is a good time to take stock on your contingency plan. How are you planning your contingencies? Good time to take stock on your expenses. How are you expending the money? And it's good time to take stock on your income. The last area you need to ask yourself, have I done something about my financial literacy? What financial book have I read? What financial program have I attended to? What financial course have I taken? And this second half of the year, we're saying it is time to invest in yourself. It is time to make things better. And here I'm inviting you as your coach in your finances, like I've done for many people over many years. Send a text to 0708 150 137. 0708 150 137. And a lot of these things we've discussed are very well covered. The book I've authored is called Wallet Words. Have your text or your WhatsApp on 0708 150 137.